More weak data out of China weighing on oil markets as investors fear a slowing in demand. The world's second largest economy saw retail sales rise by a modest 2.5% compared to the prior year. Industrial production rose by just 3.7%, both of those prints coming in below economists' estimates. Ahead of these data releases, China's central bank cut a set of key interest rates in a bid to spur growth. Joining us now is Vandana, who is Vanda Insights founder. It is good to see you. So as we look at China and as it relates to oil here, how much of a headwind is the slowing growth there going to be for oil prices?
Good morning, Julie. So Chinese economy has been sputtering without doubt. We have had months of disappointing, weak macroeconomic data. Something that has bucked that trend has been Chinese crude imports, which the refining rates of the country and consumption, end user consumption, all of which has been quite healthy. Mind you, it does come off a comparative low base of last year, but relatively healthy. But if you look at everything else on the macroeconomic front, whether it be their exports, their industrial production, manufacturing activity, deflationary pressures, all of that is just bad news in bold letters. It hasn't really weighed on crude prices as much as one would have expected, because the major counterforce has been right there in your country. Since the start of July, we've seen quite an upturn in sentiment with regard to the U.S. economy. And that has that's been an overpowering influence in crude. But looks like prices have hit the skids today. So, it might be that the Chinese pessimism is coming home to roost finally.
What are we still to extrapolate from the relationship that ensued post-Russia invasion of Ukraine and the China-Russia relationship that had ensued there? Where does that stand right there, and how are investors best to continue evaluating that?
Yeah, it's the entire scheme of things with regard to Russia, the Western sanctions, the embargoes on Russian oil has unleashed an unprecedented rewiring of trade globally. And, within that, again, we've seen China and India step up as major crude buyers from Russia. And of course, all of that crude has moved away from the European markets. So within that, China and Russia were always were close, geopolitically close, and trade-wise as well. Of course, they share a major boundary between them. So there's not just by sea, but pipeline imports of gas and crude from Russia as well. They do a fair amount of trade in their currencies as well, ruble and yuan instead of the US dollar. So I guess it was not surprising that the two countries have gotten even closer after the sanctions. And look, at the end of the day, for countries like China and India, if they're getting cheaper crude, especially in high price environment like we saw last year, and even this year's prices are relatively high for these price sensitive countries, they're just going to buy all the Russian crude and oil that they can get their hands on.
So when we look at the trajectory of prices globally, do you think that we will, despite the pause that we're seeing today, do you think we'll continue to move higher given the U.S. demand, given the Saudi production cuts, for example? Is the path still going to be upward?
So, Julie, there are definitely price supportive factors. As I mentioned, as long as the optimism over a soft landing in the U.S. survives or is alive, I think that remains a major supportive factor for crude price sentiment. After all, the biggest economy and the biggest oil consumer as well, the U.S. And of course, the OPEC Plus cuts. I think those two are major supportive factors. However, I think in the last few weeks, as we've seen crude head towards 7-month highs for Brent, 9-month highs for WTI prices, I think they have heavily discounted not just the economic sluggishness in China, but the downturn in Europe as well. So I did not expect, and I still do not expect crude to have much of an upside from current prices. At the same time, I don't see a very major downward pressure either, as long as, OPEC Plus cuts will remain. I think they are quite determined to make sure that they tighten the market, that they see inventories going down through the second half of the year. I think that the real tipping point here might be if we see anything happening that changes the sentiment, the level of sanguinity and optimism that we have in the markets right now with regard to the US, that could be a major downward pressure on crude. But all said, I don't see any reason for it to go much higher from here or much lower.
We've seen continued repricing of expectations to come out of China for this year, the latest one coming this morning from Goldman. And so for investors that are trying to best figure out where everything from crude prices to commodities that are impacted to even some of the equity market players that have the largest revenue-based exposure within China are thinking about this, from your perspective, what if any pivot is apt to be able to be making right now in this environment?
Yeah, that's a big question, Brad. So in this part of the world, of course, Indian markets have been doing phenomenally well. I think the Indian economy is running full steam, and that's a good place to invest. China, unfortunately, I think is going to take a long time to recover and certainly to regain the pre-COVID momentum that the economy had. A lot of the problems that we are seeing in China today, of course, some of them have been exacerbated by the unprecedented nearly 3 years of strict zero COVID policy and lockdowns, but a lot of them predate COVID. The property market, for instance, is, these are very systemic structural problems that are going to take a long time. You might see headlines, analysts saying routinely that whatever little stimulus that is coming, fiscal or monetary, in drips and drabs, is just not enough. And I subscribe to that as well. The government is being very careful not to overstimulate, not to add more debt to the economy, because that is already a problem, and that was already a problem in China, unfortunately, even before COVID. So it's going to be a very, very slow uphill climb for the Chinese market and the Chinese economy.
Vandana, it's always good to get your insights on these topics when it comes to the oil market. Really appreciate it, especially at after 10 p.m. in Singapore, I believe. Vanda Insights founder, thanks again. Really appreciate your time.